The main thing that's happened over the last few weeks has been the company reporting season. It's not as big as the one that happens in February or as big as the one that happens in August, but still 22 New Zealand companies reported their earnings, which means it's very, very relevant. It includes some heavy hitters: Fisher Paykel Healthcare, Mainfreight, Infratil and Ryman Healthcare, which those four companies together account for 1/3 of the index weight. The reporting season in general was a mild positive. Most analysts had expected negative earnings, and whilst the earnings per share that came through on average was minus 2.5%, that was still somewhat better than the minus 6% that was forecast by the market. So in general, we'd call that a beat or a positive outcome versus expectations. Fisher Paykel Healthcare are a truly incredible company. They sell masks which are used for acute hospital settings, as well as at home for the likes of sleep apnea. The companies continue to deliver amazing design and development and innovation around these new masks, improving the comfort, convenience and effectiveness overall. As a result, their market share in the US, which is their main market, has just continued to grow. And the New Zealand investment community as such has tended to doubt how strongly they could grow over recent times. However, their results showed that they have a strong outlook. They can continue to grow, and especially in this new business segment called anesthesia, which is very popular in Europe, and they're looking to replicate that in the States, where it's under-penetrated. If they do anything like the penetration in Europe, then Fisher Paykel has a pretty positive outlook going forward. Infratil delivered a strong, solid result. The business is a bit hard to conceptualize because it's an investment holding company which has a number of holdings. But if we were to aggregate them, collect them into groups, the two main parts are renewable energy and digital and connectivity. So the digital and connectivity part is the really interesting part of the business, where their capacity in their data centers is likely to increase by 3 times over the next 5 years. That's partly driven by the tsunami of demand coming from companies for solutions relating to their artificial intelligence needs. That's around training the large language models, inference and delivering the solutions. We're still really early days in that innovation, but all the signs and forward-looks as such are so strong that this company has some serious spending to do, but we can feel comfortable that they're going to get the returns required.